Hey, welcome back to Mr. Market. This is our fifth episode. I am Mr. Market. So this past week, the market actually dipped a little bit before coming back on Thursday and Friday, thanks to some earnings from Netflix and some friendly words from the Federal Reserve governors about interest rate policy. For us, for a portfolio, we were up about $800 last week, even though the market fell. That's because of our strategy of selling these put options, which is basically like fire insurance. And our level was originally at 385. So as long as the market didn't go below 385, we were fine. But earlier in the week, when the market did go higher up to 400, I raised my level to 390. And then as the market started to come down to 390, I reversed course and lowered it back to 385. So I lost a little bit of profit there. My original plan was to make about $1,000. Had I done nothing, that's how much we would have won. But because I had to move up and move down, I gave up some of my profits, and we ended up $800, which is still good considering the market was down. And that's one of the nice things about our strategy, is that even if the markets fall modestly, we can still make money. And so that's what we did. But this week reminded me about the importance of losses and being a good loser. It's actually one of the most important keys. To be a great winner, you need to be a good loser. And that is probably one of the hardest things as a trader. And this past week, I ran across this quote that made me think of something about trading. It was about pain. So this ties back to that concept of loss aversion that we talked about in a previous episode. And if you are going to experience loss aversion, you're not going to want to take losses. And eventually there's going to be a time in the market where your losses will become so big that you're going to have to eventually exit this position, and you will experience the pain of regret. Now, if you experience the pain of discipline, your losses will still be there, but it's going to be much smaller. So the key here is, do you want to take a smaller loss, or do you want to regret it down the road and have a bigger loss? And that's what this quote talks about. So this reminded me of a funny conversation that I had with my twin brother, Chad. Let me go show you. Ugh. What? The market dropped, hit my stop loss levels, and I had to be disciplined, so I got out. Dude, you've got paper hands. You need to buy the dip and hodl that. Everyone knows stonks only go up. Diamond hands, bro. What? No, that's not how it works. Wait, are you eating crayons? What? No, I'm eating tendies. Uh-huh. And how'd you get those? I got it by YOLOing Bed Bath & Beyond. Wait, aren't they going bankrupt? Well, yeah, but that's not important. It's Lambos or food stamps. I tripled my money. That's awesome. How much did you make? About 350. I hope you like that little skit. That was the first time I've ever done it. I'm trying to have a little bit more fun here. Let me know in the comments if you want Chad to be back in a future episode. And thank you again for joining me. In the meantime, please hit like and subscribe, and I'll see you next week.